It's not all sunshine, rainbows, and butterflies out there in the crypto world, as we did witness one of the absolute worst weekly closes that we've seen in a very, very long time. And you can see exactly what the bubbles are showing over here, which is just a sea of red, right? So in today's show, we're going to discuss what you should be waiting for if you are looking to get long in the market. We have spoken about quite a long period of time, almost a month now, of being risk off in this environment, waiting to recapture some key levels. Smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed. There's a lot to go through, right? A lot to go through. We have seen over here, if you do look at the liquidation levels over the last 24 hours, once again, longs getting smashed. It absolutely amazes me how there is still liquidity in the market, right? How there's still people playing the long side. This has got to be near a record, right? If you look at the greens over here, the green bars that spike towards the upside are long liquidations. And if you look at the amounts of long liquidations, I mean, this has got to be like $25 to $50 billion, cumulatively over time, over the last couple of months, ever since December. We must be in that region. $25 to $50 billion has got to be worth of liquidations on the long side. Of course, there have been shorts that have been liquidated as well, but nothing quite in comparison to the longs over there. So we had super low volume, which makes for easy manipulation and movement of the markets. Last 24-hour trading volume over there, it has now picked up by 111% coming into, of course, Monday. So we'll wait to see what happens when the stock markets open. It's going to be a pretty big week. I can make the case for a short-term bounce in the stock market, which will essentially drive as well crypto up in the short term, right? But don't confuse those short-term bounces with major reversals, because the trends are down, right? So we'll talk about that as well today. It's going to be a pretty big week because we also have the CPI data, which is going to be coming out on Wednesday. So that's what you're going to be looking out for, CPI. And then on Thursday, the PPI. Those are your major economic events. Put those on your trading calendars. And the monthly close is going to be even more interesting, because this is currently what the Bitcoin monthly chart looks like, and it's not looking good, right? It is looking like a major top at this point in time, right? So you'd really want to see to defend this monthly scale in terms of keeping the uptrend. Well, you really want to defend this key level over here. Let's just quickly hit the refresh button over there. Just to grab that. So you really want to defend that, right? If you're looking at this area that I've highlighted over here, bulls want to put in a high low somewhere within this region, which means that 60K level is going to be absolutely critical. So if you are looking at the high time frames and keeping it super simple, right? Horizontals always hold a much higher weighting than anything else, right? Than diagonals or moving averages, things like that. So therefore, this is going to be a key critical level. And right now, this chart is telling you that price is probably going to drop down into the zone. So, that could mean as low as $58,000 to $70,000. Now, ultimately, you would only want to see that as a wick. You definitely want to see closing candles. You want to see a big reaction out of the zone if prices even do fall into the zone, because we don't know if they will, right? Only time will tell. But if you do see price drop into that zone, you want to see immediate buying pressure step in and still have a strong monthly close. So could it happen this month? Absolutely, it's in the realm of possibility. At least that's what this candle suggests. And if you go to our weekly candle, well, we've had the weekly close, and that's exactly what it looked like, right? We said, watch for this wick over here. You wanted to see price hold at that 50% level, which we did wick down below previously. And at the time, price was hovering above that. That was 86,000. And ultimately, we said, just wait for that weekly close. And this is what the weekly close looks like right now, which looks absolutely atrocious. And I actually think that this weekly close would have already been, the death sentence for Bitcoin in the short to medium time frame, had Donald Trump not come and tweeted. This was a manipulation candle, right? And I said to you that, manipulation within the markets can spark an initial reaction or move that, yes, can create a snowball effect and bring additional momentum. But until there is actual real demand within the market, it's probably just going to be faded. And that's exactly what happened, right? The lack of volume, the lack of interest. I said, well, what have we got to look forward to next? You had first Trump roaring up the markets over here, getting people excited. That created this close over here. And then it was all being priced in for the crypto summit, which turned out to be a little bit of a nothing burger, because there's nothing different that's happening. Yes, long term, it's absolutely incredible and super bullish. They signed the executive order. Great things are coming. At least that those Silk Road coins around 200,000 Bitcoin which has always been, a FUD thing overhanging over the market, that maybe the US government are going to sell the coins, maybe they're going to sell them. Now that's kind of been eliminated or removed. They're not going to be selling those coins because that is their strategic reserve. But how are they going to start to reaccumulate new coins? And when they do that, how long is it going to take to move price, right? We already have the ETF flows, which has been pretty substantial. And really, I mean, that's what's driven this entire bull market. If you look at why Bitcoin has done so well, it's mostly due to the institutional interest. And this seems to have really been an institutional bull run, which explains exactly why most of the altcoins have done absolutely nothing, right? Altcoins have been obliterated. 99% of them are smashed against Bitcoin. There's been a select few that have done very, very well, right? The likes of, at the time at least, Solana, Mantra, Sui's done very, very well. So we can think of a couple that have done well. And we've been pretty hard hitting on playing those moves, right? And we've successfully done that. We definitely crushed it as well, jumping on first when it came to the meme coin season. Maybe we should have been more aggressive in exiting over the course of November. So you can't win everything. But for the most part, we caught the trending move. Now, when you see a weekly close that looks like this, and you've lost the 21 weekly exponential moving average, and we broke those stop and reversal indicators, which I spoke about, this is all going to be massive, massive, massive resistance. And therefore, it requires a lot of energy to reverse this move. So the levels keep changing every single week. Whereas previously, I said to you that you want to see a reclaim to be super safe, super cautious individuals. You're going to wait for a reclaim of $100,000. Now we can slightly lower that, right? For the very careful, conservative people out there, now you can wait for $96,200, right? That's going to be the level. Get back above last week's high, and then maybe you're out of the woods, right? All right, this chart over here, our parallel channel, it's also calling for the same price target over here. This is your lower boundary of the parallel channel. Here's your midline, which you can see we deviated slightly above, came back to the lower boundary, pushed to the upper boundary, rejected, and came back down. This is telling you that over the coming days and weeks, price is more likely than not to drop down to this zone over here. Of course, I am not Donald Trump or in his family. I don't know what he's going to do with the trade wars and things like that. If the war in Ukraine stops, everyone prints money, trade wars are all set aside. They came to a halt, and the negotiations are complete. Jerome Powell comes out. CPI is great. Inflation is under control. We absolutely 100% smashed our 2% target, and we are done with raising interest rates. And now we decided that we want to stimulate the economy, and we're going to print hordes of money. M2 money supply is flying to the sky, right? If all of that happens, yes, this can change the trajectory. But as of right now, the trajectory suggests $68,000 to $72,000 Bitcoin price is very, very, very likely, and it lines up with this monthly scale, right? A big drop into that zone is very, very possible. And sometimes, the market can remain irrational longer than what you can remain solvent, which means that this could theoretically overshoot that, which on the monthly scale is what would drop price into this lower region, even into the 60s. But you would expect closing candles to occur above this zone over here, and then we can reevaluate, right? So I like what Dab says over here, don't give up until after the 21st of March. And I absolutely agree with you, sir, or ma'am, he, she, they, them, though. I don't know what you are. So I think that you're probably a male, since that's the majority of the audience, right? Why should you not give up until after the 21st of March? Well, we have massive options expirations that are coming out. And, this affects the markets, right? Max pain has been towards the downside. There are, of course, pressuring all markets, stock market included, and price is very, very correlated to that. So ultimately, yes, I agree. Wait for the CPI information to all come out. Let's see what the Fed do. Maybe they take a much looser stance on monetary policy, and they're a little bit more dovish, right? Dovish means, kind towards the market, more optimistic in their speech, and that could possibly reverse things. But still, even so, within that 2-week period, a lot of stuff can happen. We just had a look at the weekly scale, and the weekly chart is absolutely terrible. One thing that you can also do to always help yourself to understand what is going on is move it onto a line chart, right? And if you look at that line chart, well, this does look like it's starting to roll over, and your next meaningful major support is going to be coming all the way down here. Price is below the 21 weekly exponential moving average, and you can see how that fared up previously, right? This was 2021 when you lost that. Yes, we lost it temporarily over here, but I think I could make the argument that barring the timing cycles, when we measure the timing cycles, we anchor from the bottom of the bear market, which would be the FTX lows, or we can anchor from where the halving cycle took place. And when we focus on that timing trajectory, we know that the Bitcoin bull runs usually last between 1,000 and 1,100 days. Right now, we're hovering around that 850-day mark. So we're close to the end, but we haven't hit that. We should theoretically have in the region of about 200 days left, which would take us to October, November. So there, in that instance, yes, it could be similar to this environment that happened with the initial drop in 2021. That drop price, I think, almost, how far was that on a closing basis? This is on a closing basis, right? 46%. On a wick basis, you went down below 50%. But I could also make the argument that there's a real possibility that you situated over here where you've just lost that 21 exponential. And if we do continue to drop down, you know, that took it to 35K. This would be the equivalent of dropping down into those 60s. And then if you put in a dead cat bounce and you lead into this environment over here, where maybe you break back above the 21 exponential, but it's angled down, that's your your final trap scenario, getting people bullish once again, thinking that we're going to rally up. In this environment, they thought we're going straight to 85K. And I was publicly, actively 100% short on YouTube. I was not on YouTube in this environment, or I would have been short already at $52,000 was my system that told me to get out. So my first public appearance on YouTube was over here, and I was actively 100% short. You guys can go look at that from 48K, and I said we're going sub 20, and that's exactly what happened, right? Now, if you look at the price action over here, well, it could be a similar environment, right? It absolutely could be a similar environment. And we have to be aware of that. We have to be cautious of that. Remember the bearish divergences, right? So point is, this chart is calling for $68,000 to $72,000. If you are wrong, right? Cool. Get back long as soon as you start to reclaim those key levels, right? Around that $94,000 level, you can say that this was then a high low, and you've shaken players out of their positions, right? You get back over here. That's fine. So what? Your opportunity cost is you're getting long a little bit higher, and then you can continue towards the top of the trend, which is going to be looking at about $125,000, which is also one of our major targets, right? But when you study this information, what it's telling you over here is multiple candle closes underneath a key level. We have 1 day and 18 hours left to go. That would mean 3 major high time frame candle closes underneath key support, with the moving averages all now starting to turn bearish and roll completely over. That is 3 full candles. That tells you expect capitulation lower, right? You get time-based capitulation and you get price-based capitulation, right? So if you don't tag this level over here and you just hover around these lower regions, which I'd find incredibly strange, I don't think that would happen. I would lean towards a price-based capitulation with a deeper drop. But if you did hang sideways, you would still hang sideways for a very long period of time before reaccumulating and heading up, right? So we can have a look at the stock markets, because I think this is ultimately going to have a major effect on what crypto is doing. So let's take a look at it. We've spoken a lot about this, the bearish divergence. We got the weekly close. The weekly close was mostly bearish, but it can put in a short-term bounce, right? Which I'll show you on the lower time frame. So, well, let's quickly go to that, right? Lower time frames, the S&P 500 is coming into the 200-day moving average, which is your blue line running up over here. So theoretically, yes, absolutely, this could lead to a short-term bounce, but there is some conflicting data, right? I'm going to show you what that conflicting data looks like. So if you get this bounce and it leads into a lower high, which would be my expectation, we spoke about this a lot last week on Friday. I said 6,000 is the level to beat, or Saturday. Actually, I spoke about it on Saturday. You're looking to reclaim $6,000. Otherwise, you expect a rejection from 6,000. And if you get that rejection, this could easily roll the stock market over. And there's absolutely no way in hell that crypto can perform while in a rolling over stock market, in a downtrending stock market, right? So we'll have a look at the weeklies as well. This is your daily time frame, suggests possibility for a short-term bounce, and then probably it's going to get faded, right? All right, let's go back now. The conflicting data, we'll go to the weekly now. The conflicting data is this. The conflicting data is that you have the DXY, the dollar index, coming into mid-range key support. Now, what do we do with support? We buy it. What do we do with resistance? We sell it. Now, why is it conflicting data? Because if the DXY does bounce today, well, then you might actually see this level not hold. You might actually see this just roll straight over. And that could be what leads to the capitulation candle in Bitcoin, right? So you have to be aware of that. I'm not a fortune teller. I don't have a crystal ball. I don't know what's going to happen over here. All I can tell you is that this tells me this should bounce price. This also tells me that price should theoretically have a short-term bounce over here. But I don't think that both of these things can happen, right? Because they mostly trade inverse to one another. So understand the risks. You know, the risks are that if this bounces, then the stock market is going to smash straight through that 200-day moving average, and it's going to go lower. Okay. The other thing that you can be looking at is if this just continues to drop, which has been pretty brutal, right? You should expect at least a bit of a bounce over here at some point. But if this does smash through, then yes, that will be what causes the short-term bounce. And then at a later stage, the DXY puts in the next bounce. That becomes the lower high on the stock market as well as crypto. And then you can offload some additional positions over there, right? So some food for thought. Now let's look at the weeklies, right? So weeklies across the board over here, you know, bearish, right? You got a change of character over here as well on the QQQ. You've taken out the previous high low on a weekly scale. The last time that this happened, we went into a bearish market for a number of months, right? We can look at NVIDIA as well. There are some trade opportunities, right? I would say, you know, for NVIDIA, same thing. You've taken out the previous high low. And according to NVIDIA, I think this could easily come down to around $75. Now, if NVIDIA unwinds and goes to $75, that could also create some additional fear within the stock market, which is why, you know, the S&P 500 could theoretically start its downtrend over here as well. So we need to be careful of that. MicroStrategy, I don't have too much to comment on. It's kind of like all over the place, but it almost reached our key level over here in the $225 region. Coinbase is lining up for a pretty key zone. Why? On a weekly scale, you know, you have this trend line over here on the RSI on the weekly scale, which is finding a bit of support while it's simultaneously coming into the old range. You can see previous support, tested as resistance twice and marks price all the way down. This is following the initial IPO that they had. Reaccumulates, holds that level, sends it up, right? Support, loses it. Big move up, and now you're theoretically coming back into that for support with the upsloping trend line. So Coinbase is pretty interesting over here. The other thing that's interesting over here is Tesla, right? I'd also be, if you get that short-term bounce, now it's completely dependent on the daily, right? If the daily leads to the short-term bounce, which would mean that the DXY has to break through this mid-range level, then Tesla should also catch a bid over here, because similar to Coinbase, you have a beautiful retest over here on the trend line. If you look at that over there, right, you've got touch point 1, 2, you're coming in for touch point 3. These trend lines tend to work quite often, by the way, when it comes to momentum oscillators like the RSI, right? You also have your 200-week moving average, which is close over there. So, and this is still higher highs and higher lows, right? So you're looking for price to maintain that high-low structure, which means you don't want any candles to close below 213. Not only that, but you're also caught within the mid-range. So, you know, maybe you dip a little bit further down, but anywhere around this region, you're looking for a potential trade. I have dropped this in the Whale Room Discord. For those of you that want the charts, I can also drop the rest of them in there for you as well, straight after the show, right? So these are some of the things that we're looking at. If you do want to take these trades, by the way, all of this is on BTC.D, which gives you a crypto-friendly look and feel, but allows you to trade things like equities, forex pairs. It's got stock market things on, right? You have over here, of course, Coinbase, gold, Meta, MicroStrategy, NVIDIA, S&P 500 and Tesla. These are the ones that we've marked as our favorites to trade. So those are the trade opportunities. If you do want to take this trade, they do offer an amazing sign-up bonus, 10% on your first-time deposit, 50% bonus as well if you are below $200, right? So basically what I found out on this platform over here is your sweet spot. If you want to qualify for the most amount of money, instead of depositing $10,000, literally just take the simplest approach, which is put in $200 as per the description below. Use that specific link if you want this. Put in $200 and you'll get 175. So you click that link, sign up, no KYC required, put in $200 and they'll give you $175 to trade with, right? All right, so then you can take one of those trades there if you want. Let's continue. So that is the DXY. All eyes on the DXY, all eyes on the stock market in the open today. I'm leaning towards a short-term bounce, which should lead to a short-term bounce in crypto as well. But high time frames, nothing really changes. I've shown that to you, right? And this is what it all came down to. It all came down to what is happening with the daily exchange volume. I've also been updating this in the Whale Room Discord each and every day. it's still in a downtrend, right? And I expect today's probably going to tick down again, which reinforces that this downtrend remains with lower lows and lower highs. And until you can buck this trend and move towards the upside, expect that it's going to be really, really difficult to catch a long trending move. And it's all about the trend, right? The trend is your friend till the end. If Bitcoin and cryptos are in a downtrend, you do not want to be adding more money into that. Trust me, these trends can go on much, much, much longer than what you think. And that's our aim, right? That's the main aim on the shows. I'm trying to help you to identify the trend. I'm trying to help to get you into trends early when it's safe and when price is moving up. And then I'm trying to get you out of those trends as soon as possible, as soon as they turn down, right? Which is what we've seen now. There's no debating it. We've started to move into downtrends, not yet on the weekly and the monthly, but if you're waiting for that, you're going to be wrecked, right? You can't wait that long for monthly downtrends to occur. We want to get out way, way, way before that, more like on the daily at the very, very least, right? So that's essentially what we're seeing, lower lows and lower highs. Of course, you can always make an argument that you're in like a macro range, because this is the whole thing, right? Identifying the difference between are you in a ranging market or a trending market. We look at things like volatility to determine which one is coming next, right? Typically in neutral volatility environments, you're just shopping between a range. But if the volatility goes extremely low and begins to expand, which we use that Bollinger Band width percentile to identify, and that's what we've seen right now, then you may actually be starting the start of a downtrend, right? So high volume area being keeping us safe. That's still the level to reclaim. I think that you can probably pull the trigger. Look, we've been taking it level to level, right? As soon as we broke structure, we started to take it level to level. So I'll throw in a horizontal over here to showcase, what I mean. So first, we started to break structure. We said, do not touch crypto until you can get back above that level, right? $100,000 to round it up. That's the safe level. Close multiple candles above there, get long. Then we had the fake Trump pump, right, which sent price in there, creating the next high low. Then that became the level to reclaim, $95,000, right? Then you sent price up, rejected once again from the volume profile over here, this high volume area. You can see not as high as the point of control, but still a pretty significant area, $93,000. Now you can basically say that's the level to reclaim. And this is how we mark things as the trend persists, right? Now, if you spike up over here, put in yet another lower high, which I would expect to probably occur somewhere around this breakdown candle. I don't actually think you're going to get back above that 97K level. So therefore, it would look something like this. You would be looking at something like this if you do get a move, right? Probable. This is, yes, you can wick through, but I'm looking more at closing candles over here for the high time frame trend. Closing candles would probably look something like that, and then you're moving down. So what you have to do is you either have to wait for higher, break the structure, break the trend, or you have to wait for lower, wherever the next major key support is. So I may attempt to put in a buy at about 72,000 if we do get to that zone. But otherwise, this is probably, right now, it's this level, right? Reclaim that level if you want a quick entry. I expect probable rejection over here, and then we're going to lower this to about 88K. And so we just keep moving it down, right? Okay, let's clean that up. I don't want this all on the chart to make it a mess. Next, prices below the 200-day moving average and the 200 EMA. This is on the daily time frame. So we've actually lost both of those levels with a closing candle. Remember, if confused, always switch to the line chart. And what does this line chart tell you? It's literally lower lows and lower highs on a closing basis. So don't get overly excited off of a bounce over here. If you get a short squeeze, it's very, very short-lived and short-term. It's a quick scalp trade, Entry over there, stop loss below here. You trade it up into the 88K, expect a rejection with another lower high, and then ultimately, prices probably fall down to about that 70K region, 70, 72. Okay, that's what we're looking at over there. That's pretty clear-cut and simple. Your RSI is trending down. It's got to one of the lowest levels, definitely, which, of course, it's oversold. So at some point, you'll get a big bounce. We'll keep an eye on this. Maybe you're going to start to print a little bit of a bullish divergence over here. You can see over there, you got, lower lows, higher lows on the RSI. Let's wait a little bit more for the rest of today. Weekly still look pretty dismal, but, could you get a bounce over here? Absolutely, you can get a bounce. You can definitely get a bounce into 88K, which is pretty substantial, right? From current price, what would that give you as a percentage? From here to about 88K, that's like a 7% move. Your bubbles will be green across the board, and there'll be euphoria and excitement back in the market. We're so back. All right. So we got that covered over there. Guys, if you appreciate the show as well, please do smash the like button. Now, remember, Bitcoin is trading inversely to the USDT market cap, right? You had this wedge, and we spoke about these wedges typically break in alignment with the prior trend, which has been up, right? High time frame, long-term reaccumulation zone, breaks out, holds a support, marks up, down, up, breaks through, right? So this is more bullish than bearish. Even if you do get those pullbacks, exactly that, right? If this pulls back like this and sets in a high low over here, so low, high low, high low, this could take Bitcoin to that 88K short squeeze, right? You could see that move. Bitcoin goes to 88K, finds support over here on the high low, send it back up. What does Bitcoin do? Bitcoin goes down. And then I guess if the USDT dominance does reach our higher targets, which are going to be around 6.4%, that probably drops Bitcoin into those 70K regions, right? Low 70s. And then I think that's a good zone. That's a great zone to at least attempt to buy, because even if you do this, even if this is going to break out of the pink zone and go above 6.4, 6.3, I would still expect a meaningful correction. And that meaningful correction could take Bitcoin from 72K, back up over 100K for a lower high. That's possible as well. So we traders, right? We're taking it one step at a time. That's what we're looking at over there. Here is BTC on the 4-hour time frame. Now, I must say, over the course of the weekend, I was really expecting that this would break towards the upside first, right? So this is why we take each trade as a risk to reward trade. And then if it allows it to develop later on into a swing trade, that's wonderful, right? Because my expectation was we're actually going to see this spike up first, squeeze out all of the early short traders, take them out of their positions, and then smack it down. That's what I was actually looking for. I didn't publicly say that, but at least I'm honest. I'm sharing with you in my mind what I was looking at, right? I didn't jump into any longs, of course. Instead, this broke through. So I guess we do need to be careful, because market makers like to engineer liquidity and trap people. So you always have to be open to the possibility that, that could be the shakeout reclaim, get people super overly excited, smash it back towards the upside, and then hit it back down, right? You could even see this. So something like this, big up move, and then come down, get people long again, and then smack it down one more time. So tied in with what's happening on the dailies and the weeklies, and what's happening with the closing candles. The other thing that we've been paying attention to for quite some time, which I actually dropped in the Whale Room Discord, this was, I said, I'm your hopium dealer. If you need that hopium to be dealt, come to Whale Room, because we look at things from both directions. So you can read between the lines. But one of the things that we're looking at, was this, right? That was on the, what are we on now? That was the 4th of March, right? So a couple of days ago, about a week ago, we're looking at this, right? I said, spotted this during the live Zoom sessions that we do with the Whale Room members. Actually pretty interesting. Open interest is reset back to levels last seen during the lows of the bull run, all the major lows during the bull run. I'm going to show you on the real life chart now. Funding has also started to turn negative, which is always a good sign. If you have backwardation, which is also another way of looking at negative funding during a bull market. So that's the question. Is this still a bull market? Actually vote in the poll. There's a poll over there. Let me know. Is it a bull market, right? In your opinion. If you get negative funding and it is a bull market, this is a very positive sign, right? I said it would be great to see it just sweep a little bit lower, right? The best case scenario, I said rate would be to go back down to the range breakout level, which is $73,000, which is also a big fair value gap. I said, but it would be nice to see that happen with a couple of scam wicks dropping possibly into the 60K region, right? But still closing at 73,000 or higher. So as I mentioned on the monthly scale, right, that's how you get those drops down, a little bit of a capitulation candle. If you could see it drop down into those levels with scam wicks running down, panicking people out like crazy, but still closing higher, that's your shakeout with negative funding, right? If that happens with extreme negative funding, then we should have also seen enough of a flush and reset to possibly reset the course of the bull run, right? Reset the ship, the direction. This would also keep the Elliott wave bros hopes alive, that we're still possibly putting in a minor wave 2 bottom, which is part of a greater wave 5 count, right? Meaning that we'd then go up into wave 3 of the ultimate wave 5 count. So wave 3 of wave 5 is going to be the strongest moves that you see the biggest pumps that you've ever seen. And then I said it would be aggressive, powerful, and to the upside. And then that's where you'll get your chance to offload, right? So have we seen that? Well, of course, the open interest has come back down into those zones, but the funding is now getting beautifully negative over there. That's what I like to see, right? I don't like these small little negative ones. These are nothing. That's nothing. We want those big ones, right? And we're starting to get it. So we're not going to get as big as this. I don't think this was the FTX collapse. So FTX collapse, super negative. USDC-D peg, super negative. Everybody calling back to for price back to 15K range lows. Negative funding over there developing. If I zoom in, there it is. I'll just expand it like that. There you go. Negative funding developing, open interest coming down. Really, really nice over there. Couple of shakeouts over here. This was the yen cash carry trade unwind. Bitcoin down to $49,000. Beautiful negative funding. And now look at that. Look at that. Really, really nice. This is good. I want to see a couple more days. I'd just absolutely eat it up if it came down into, that 68K region like that. But we're still closing candles above 73. That would look beautiful, right? So I know that I'm super bearish, right? I'm super bearish, but it still means we can take longer term, we can still take short-term long trades, right? So those short-term long trades, then hopefully those turn into swing trades. What do I mean by that? So you look for the long trade, into those low regions, as I showed you. You look for the long trade. You set up your risk to reward, stops there, entry over here. You trade it up into where the next resistance would be with the anticipation that you're probably going to take profit into that as resistance. But if it does break this level and continue up, it turns into a swing trade. And then maybe this stuff comes into fruition. What do I mean by this stuff? I mean, this would keep the Elliott Wave Bros hopes alive, right? Possibly putting in a wave 2 bottom, which is part of a greater wave 5 count. What do I mean by that? I'm going to show you what I mean. Let's go on to, what chart should we go on to? Let me just see. Maybe let's go into this one just because it's nice and big, right? What do I mean by this? All right, let's turn off these indicators over here. Let's turn off on this side because I need a drawing tool. All right. So what you'd be looking at then, I think this is fine. Yeah, this is fine. Okay. So you have this, here's your Elliott wave, right? You got your, your first move up. That's wave 1. You come down wave 2, you go into wave 3. There you go. You go down into wave 4. And now this could be the wave 5 top of the bull market. But these things can sometimes extend. What do I mean by that? They can extend because if you have another setup of Elliott Wave, I'm not an Elliott Wave bro, just so you guys know, but I'm just showing you what it would look like, right? This would therefore be wave 1 down to wave 2. I'm hoping you hit there, wave 2, and then you lead into wave 3 of 5, right? Let's just clean that up, whatever, like that, something like that. Let's change the color. Let's make it on smaller points over there. We'll put it in yellow. So there, the yellow becomes the wave 2 of the broader wave 5. Then, therefore, this would just extend further. That would keep those hopes alive, right? I don't trade off this. It's just food for thought. It's just something interesting to look at. So, therefore, you want to find support here. You definitely want to see support somewhere within this region. Okay, cool. Those are the bullish hopes. Bitcoin dominance continuing to rise. As we spoke about, this has been more of like an institutional cycle, which is why things are going up. Let's just quickly acknowledge this comment. Bounce, so I cut it off. Please zoom in and look at the at the image over there, guys. Bounce or we'll cut it off. We're not joking this time. We're ready to have a sex change and we're not playing games. All right. Let's continue, guys. Let's continue. So we've looked at that. Again, if you do want to learn more about all of these things, please do jump into Well School. This is where we discuss this stuff at length, right? So if you want to learn more about this, jump into Well School. We're taking signups right now. 14 days left to go before the next Well School starts. So you have 2 weeks. I think we had about 85% capacity in terms of the number of signups. It is $1,999 to join a NES. A NES, you cross that out. And how do you get in for free? You need to sign up to one of the exchange links in the description below, right? So we're basically paying you to join. I've never seen a better deal than this, right? If you use the link in the description below to WEX, deposit $200, they will literally give you $100 for free. And that becomes your ticket. The user ID that's generated by signing up to WeX is your ticket into Whale School so that it's free, right? Unlock the course for free. And this goes for all the crypto banter courses and any partner that we have. By the way, there's many more partners that are coming in, you know, people with other channels like Eric Crown has, who are going to be giving all of their free alpha for the course, but only if you use these links, right? So that link qualifies you in for free. All right, let's continue. So Solana, you know, pretty much caught right down at the range low. I have been pretty vocal on this. Yes, this is support theoretically, 122. But I said I would like to see, hopefully with that Bitcoin move down, if we get that move down, that's a if, right? If we do get that move down, I'd love to see Solana, drop even below 100. I can imagine the headlines, right? So deviate this level below 100. That would probably be a good zone to get long again. And then you look for the relief, right? The relief rally, the counter trend move. These counter trend moves can be huge, right? This could run to about 216, 220, and then still put in a lower high. But that's tradable. This becomes an amazing, amazing trade. Like imagine you get it just sub 100 and you trade it up to about 220, and something liquid with a lot of volume, 130% move, right? It's decent, very, very decent move. Okay, hype. Quickly zooming in on the 4-hour time frame. We spoke about potential trade setups from the low over here where you're looking for, let's just clean this up a bit, where you're looking for a bit of a reversal from this region. It's currently still chopping about, if you go into the hourly over here, there it is, you can see. I think this could easily bleed down into about this 13.8 region. So it's going to be similar to things like Solana. You can catch some serious reliefs here, right? Serious relief rally like that, all the way up at least into this zone. Then you look for the lower high. That's big. What else? Let's have a look at on the dailies. Let's check out SUI. So SUI, Trump pump once again failed, right? Whatever their bullish news was, there it was, that candle, straight rejection into the underside resistance over here, lower high, straight down. So avoid this and avoid crypto until this happens, right? That is the title over here. And thank me later. Thank you for the designers and the show writers who came up with that amazing title today. Give them a like if you appreciate it. To give you attach a little bit of alpha to that. It's pretty easy, guys. Just wait for the break of these downtrends, right? That's all you have to do. The trend is your friend till the end of the trend. Stop trying to be a hero and catch every bottom, right? You try to catch that bottom, you're already at a loss, right? And that would have been the ultimate low. Most people probably bought over here at about 290, big push up. If you bought over here around that 290 region, you are down 20% again. Why? Because of the trend. And it could happen again, right? That's why just wait. Just wait for this to be broken. So, you could think that's the bottom and then it comes down. You could think that's the bottom and then it comes down. And just keeps riding it down. Just wait for a proper break, right? Let the euphoria re-enter the market. Wait for the euphoria breakout buys to get smashed like they always do. And then if that sets in a high low, that's where we start to jump back in, right? Okay. Tattoo Me says, so it could go up or down or sideways. I think maybe you should just get another tattoo there. Maybe you should tattoo a compass on you and then you can find the direction. All right. What else have we got, guys? What else have we got? Let me know if there's any other charts that you want to have a look at. I think that, yes, the answer is in the USDT dominance as per Dathan. Dathan Smart, not Nathan, Dathan. Interesting. Okay, cool. Let's see. ETH BTC, right? Still getting annihilated. This thing could pretty much easily come now down to the next level. Is going to be around 0.020, right? So pretty brutal for the altcoin sector. Remember, all of the alpha is in the Whale Room Discord. If you're confused about up or down on whatever relevant time frame, you can always come over here and you can just ask us, right? You can go, there's actually a section over here where you can go to, where's that? Ask the team. Where's our Ask the Team section over here? Am I missing it? Ask the team. I have to find it now. I've committed to this and I'm going to find it. Where is our Ask the Team? Okay, guys, trust me, there is a Ask the Team section over here. And then you can come and chat to us. All right, that's it from me, folks. I'll see you all on the next one. I hope you have an absolutely stellar day. Stay safe out there. Wait for the trends to turn back up. And I'll catch you on the next one. Cheers for now.